How does price elasticity of supply impact real estate market trends? Imagine a neighborhood where home prices suddenly jump. You might wonder how quickly new houses will appear to meet that rising demand. That's where understanding how supply reacts to price changes comes into play. Price elasticity of supply measures how much the quantity of real estate available changes when prices go up or down. In the short term, supply tends to be inelastic because building new homes takes time, often several years. Developers need to secure land, get permits, and complete construction, which can take anywhere from 6 months to several years. So even if prices rise sharply, the number of homes available doesn't increase immediately. This limited responsiveness can cause prices to spike quickly when demand grows. Over the medium and long term, supply becomes a bit more elastic. Builders can respond by constructing new homes, renovating existing properties, or converting commercial spaces into residential units. But this flexibility is still limited by factors like land availability, rising costs for materials and labor, and local zoning laws. For example, in urban areas with strict zoning rules, supply remains quite inelastic. This means that even if demand increases, the supply can't expand fast enough, leading to sustained price growth. In markets where supply is more elastic, prices tend to increase more gradually. When new housing developments are easier to approve and build, supply can keep pace with demand, preventing prices from rising too quickly. This dynamic is especially relevant in many metropolitan areas with sizable Asian American communities, where demand for housing is high but supply constraints are common. When supply can't respond swiftly to demand, prices tend to rise faster than incomes, making it harder for families to buy homes. Understanding how supply reacts to price changes helps explain why some markets experience rapid price increases while others stay more stable. When supply is inelastic, even small increases in demand can lead to large price jumps. Conversely, more elastic supply can help moderate price growth and improve affordability. For real estate professionals working with Asian American clients, knowing these supply and demand patterns can guide better advice on when and where to buy or sell. It can also inform discussions about policies that could make supply more flexible, like easing zoning restrictions or streamlining building permits. In the end, the way supply responds to price shifts shapes overall market trends. When supply can't keep up with demand, prices tend to climb sharply, creating challenges for affordability. When supply can respond more easily, price increases tend to be more controlled. Recognizing these patterns helps everyone involved in real estate make smarter decisions and better understand current market movements.